Hi guys, and welcome to today's lesson. So today we are talking about support and resistance. So this is a very core part of technical analysis. This is something that I believe that every beginner and everyone trading in general should know. So make sure you stick with me to the end of the video because I have a bonus for you guys. So support and resistance. What is support and resistance? So on the charts, you can see this is the chart of the GBP yen, pound yen. So first, identifying support and resistance. How do you identify support and resistance? Support and resistance can be classified, or support and resistance can be described as these are areas on the market where market gets reaction, where price gets reaction from the points. So on this pair, we can see the market is moving lower, but we can see market reaches a point, then reacts. So this is possibly a support zone. So to identify support zone, you just look at the market and find areas that the market is reacting from. So in this example, so you can take a line. To use this tool, go to Trading View. Up here, the tool section, we have our horizontal line. So that is what you're going to use for today's video. Right here, every broker should have this, or every charting software, I believe, has tools that you can use to analyze the market. So in this pair, so first to find places that the market is reacting from. Example right here. So we identify that is the first place that the market is reacting from. So as you can see, market has reacted. So we have a touch here, we have another touch here, and we have another touch here. So support and resistance are zones, not lines. As you can see, on this line, as I like to draw it, I like to identify my support and resistance as zones instead of just plain lines. The explanation to this is very simple, because the market reacts from a point, not a exact set point. So here and right here, so that is our first support zone. Support and resistance simply means the market broke through. When price trades above it, it becomes support. So we can see, for instance, 1, 2, 3. Price is above this zone. When market breaks through the zone, it now becomes resistance. Resistance simply means that market is not breaking through the zone. That is resistance. So we have first right here. Secondly, moving right, we can see the market reacted here, 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 here. On all these instances, price was finding support, was finding resistance. As you can see, the price moves higher, hits this point, rejects 1, 2, 3 times, and moving right, you can find price also rejects from the upside, meaning it became support. So this is a zone that was once support and is now resistance. So we identify more. So in this zone here, you can see price has bounced 1, 2, 3 times, 4 times, 5 times, 6 times. For support For support to be valid, price has to be bouncing from that zone a number of times. So this was once support, and right here it was resistance. So this is a resistance and support point. More up here. So as you can see, price is finding support here, is finding resistance, is finding support. So in simple terms, we can define support and resistance as the backbone of the market. These are the backbones of the market because market always finds structure on that point. This is a point that very many traders are actually looking at. So we can wait for price to see how price reacts to that zone, because these are patterns that are known and many traders are trading them. So we have more here. So this is on the 1 hour time frame. So this is a support zone. There are different methods of identifying support and resistance. So right now we just choose one of those methods. We found places that price is bouncing from. There are three major ways of identifying support and resistance. So we can move higher and continue identifying these support and resistance zones. So as you can see, market is moving higher, comes, bounces 1, 2, 3. So we can be guaranteed that there is a resistance zone right here. So we come to our tools, identify the tools you need. So as of now, we're using the horizontal line. Mark it out. So we can see price is bouncing multiple times from this same zone. So this qualifies as a resistance zone. Moving higher. I'd really recommend that you're actually on the chart and practice this as we are teaching it right now. It makes it so much easier to understand the concept. So that is, first we identified it from multiple touches from the zone. The second way of identifying a support and resistance zone is through weak rejections. As you can see, price is rejecting from the downside. Weak rejections are basically points in which price reaches but is rejected before the close. So this is a weak rejection. So we can be guaranteed that there is a support zone. These zones, the first zones, we have identified them from bounce by the market. The market is actually bouncing from those zones. So the second way of identifying this zone is from these weak rejections here. So price is rejecting here and here. Right here, this is our first weak rejection, our second weak rejection, our third weak rejection. So most likely there must be a support and resistance zone. Let us identify them differently to make it simpler. So this is our newest zone, so let's not identify this one first. I'll explain in a bit. So these are our first initial zones. So the second way, as you can see, price comes, bounces from this support zone right here. We know it is a support zone. Why? Because price rejected 1, 2, 3, 4, 5, 6, 7, 8, 9 times. So if a market reacts to a point more than 3 times, it qualifies to be a support zone. So let's identify this one. So to the second way of identifying support and resistance. So first, a quick recap. First, I've told you we understand it by where the price is finding bounces from that point. That is our first way of identifying these zones. So these zones are identified. Why? Because price is bouncing from them numerous times. So for the second way of identifying price, support and resistance. So we can find that yes, price is rejecting from this zone right here, and this zone and this zone. So for the second way of identifying support and resistance, price is forming weak rejections from a place. So as you can see, what I mean by weak rejections is things like this. Market comes all the way but find buyers right here, and price is rejected. So this is what is called weak rejection. Looking closely, we can also see that price is forming, this is what is called weak rejections. So to identify that, we can identify that there is a support zone right here, so we identify it. So in order to know if your support is valid, you have to look for touches on that zone. So this we have identified because of the touches, this because of the wicks. So moving right, we find that price is bouncing off 1, 2, 3, 4 times. So this qualifies to be a solid support zone. Okay, as you can see, price is moving. So those are the two major ways of finding support zones. As you go higher, there are more advanced ways, but we'll cover this in a more advanced lesson. So for a quick recap, price, if you identify zones based on how the market is reacting to them. So if the market bounces off a place for numerous times, there is most likely a zone right there. So keep that in mind.